Hello, this is Japanese Economic Review Channel. Today we analyze the Bank of Japan's CSPI for March 2026 and FY 2025. The index reached 113.5, signaling a definitive end to a 40-year deflationary paradigm. We will explore the ongoing inflation breakout and its key sectoral drivers. The headline YoY inflation for March hit a striking plus 3.1%. The FY 2025 average settled at plus 2.9%. The index level of 113.5 is the highest since 1985, confirming a structural shift to a, quote, higher for longer baseline in Japan's economy. Looking closely at the plus 3.1% YoY increase in March, we see a heavy concentration in transportation. In fact, 72.5% of the acceleration from February stems directly from the transportation and postal sector, driven by extreme ocean freight spikes. Geopolitical shocks pushed ocean freight up by an anomalous plus 42.1% YoY. However, if we remove international transportation, the core domestic service inflation rate stands at a steady, controlled plus 2.8% YoY. The domestic core remains highly robust. Various services, including accommodation and waste disposal, anchors the index with its massive economic weight and plus 3.4% YoY growth. Meanwhile, transportation runs hot at plus 4.5%. And information and communications shows a steady plus 2.3% growth. A crucial insight is the embedded wage pressure. Both high, plus 3.0%, and low, plus 3.1%, personnel cost services are maintaining steady approximately 3% pricing power. Rising labor costs are now successfully passed through to B2B clients across the board. FY 2025 averages confirm a structural transition. After the peak supply-side shock of plus 3.3% in FY 2024, FY 2025 settled at plus 2.9%. This demonstrates that prices are finding a new equilibrium near 3%, rather than reverting to the pre-2020 bound. FY 2025 sector performance highlights distinct trends. Various services led with plus 3.3%, driven by an plus 11.0% explosion in accommodation due to inbound tourism. Conversely, finance and insurance lagged at plus 1.1%, showing uneven inflationary impacts. Taking a long-term view, corporate service prices have definitively broken out of the lost decades. The FY 2025 average of 111.8 surpasses the 1992 peak of 110.6. The 25-year deflationary mindset is now mathematically and practically obsolete. In conclusion, corporations face three realities: navigating volatile international shocks, leveraging a domestic engine driven by labor scarcity, and adapting to a new equilibrium. Strategic focus must shift entirely to managing margins and pricing power. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.